Thank you so much for being here with us this evening and taking time out of your busy schedules to join this important conversation. We know student loans can be overwhelming and confusing, especially with all of the recent changes happening at both the federal and state levels. So we truly appreciate you showing up to get informed and empowered. My name is Tanaya Moore, and I'm the Director of Policy at the Cash Campaign of Maryland. CASH stands for Creating Assets, Savings, and Hope, and we work to promote economic advancement for low to moderate income individuals and families through a variety of services, including free tax preparation, financial education, and advocacy. We believe that access to clear, accurate information and strong consumer protections are essential for building financial stability and long-term opportunity. I bring a background in public policy to this work, but I am also personally connected to the issue we're discussing tonight. I'm a first generation college graduate, and like many of you, I'm still navigating my own student loan debt. That lived experience fuels my passion for making sure borrowers have access to clear information, strong protections, and a fair system. Again, I'm so glad you're here with us this evening, and I'm looking forward to a thoughtful and empowering conversation. I want to give a special thank you to our guest speakers for lending their time and expertise tonight. Just a few housekeeping reminders before we get started. Please stay on mute unless you're speaking during the question and answer section of tonight's webinar. Feel free to use the chat box to drop your questions or comments throughout the webinar. This session is being recorded, and we are happy to share the recording and any other materials via email after the webinar. If you're having any tech issues, send us a message in the chat, and someone from our team will do their best to help. We encourage respectful dialogue. Please be kind, stay on topic, and give space for others to engage. Now that that is out of the way, I would like to I'm honored to introduce Delegate Ryan Spiegel. Delegate Ryan Spiegel has been a steadfast advocate for economic development, financial education, and community empowerment throughout his public service career. During his tenure on the Gaithersburg City Council, he led the creation of the city's Financial Empowerment Center, an innovative initiative aimed at promoting financial stability, increasing economic opportunity, and providing residents with tools to navigate complex financial systems. Now representing District 17 in the Maryland House of Delegates, Delegate Spiegel continues to prioritize these issues at the state level. Delegate Spiegel's legislative efforts seek to bring clarity to Maryland's financial and banking systems and expand access to resources for all residents. Delegate Spiegel, thank you for being with us tonight. We love for you to share about an exciting bill that we partnered on during the past legislative session, House Bill 795. If you can talk about why this legislation matters to you and how you see it making a difference for student loan borrowers here in Maryland, that would be greatly appreciated. Again, thank you, Delegate Spiegel, for joining us.
Well, thank you, Tanea. And I want to start by giving a huge thank you both to the Cash Campaign and to the Maryland Center for Collegiate Financial Wellness for your advocacy and your hard work and your outreach and education. And I also want to thank all the folks who are on the Zoom tonight who took the time to be here to learn through this webinar about the important developments, both at the federal and state and level, in terms of student loans. This is a journey for thousands, really millions of people across the United States, and we're trying our best to make Maryland a leader in understanding these challenges and making sure that we help in every way that we can to open up the doors of economic opportunity and higher education. I will share that I've been practicing law for 23 years now, and my last student loan payment for law school is due at the end of this month. So I am also somebody who has been on a long journey of student loans and student loan repayment. So I know a little something about it from personal experience as well, in addition to my policy passions to try to make things easier for folks throughout Maryland. So thank you for taking the big step of being here, both the advocates who are here to educate and the attendees who are here to learn so that we can share the important developments that have been happening to try to help you. So with the help of the Cash Campaign and with the help of the Collegiate Financial Wellness folks, we have been able to pass a very important bill that we tried to pass for a number of years with the leadership of my colleague, Delegate Leslie Lopez, but for a variety of reasons and politics, wasn't able to make it over the finish line. And this year, I'm excited to say that it did. This is House Bill number 795, which was recently signed by the governor and is now law and will take effect on July 1st in just a couple of weeks. And what this bill does is it creates additional supports and resources for folks in the state of Maryland to be able to learn about and apply for the federal Public Service Loan Forgiveness Program. And that is one, you'll hear more about what's going on at the federal level, but that is one program that I'm happy to say is still in existence, at least as of today, and continues to help people who choose to go into fields of public service. And what this bill does is it basically does three things. First, it requires our student loan ombudsman, which is a position that already exists in our Maryland state government, to develop a standardized set of materials about the federal public service loan forgiveness program so that employers in Maryland can provide that information to their employees. Both when you first start your job, your employer will be required to let you know about this program. And on a yearly basis, they'll be required to provide updates and reminders about the fact that this program exists. It also is going to help make it easier for folks to qualify for public service loan forgiveness by requiring your employers to certify your status directly with the Department of Education, which makes it much easier for you to certify your eligibility to get this loan forgiveness program and to ensure that you're meeting the requirements. So basically, it will require the employers to proactively provide that certification information and give you the forms that you need already completed, because there's a portion of the forms that's required to be filled out by your boss, by your employer, in order for you to apply for loan forgiveness. And then finally, for those who work as adjunct or non-tenured professors at public colleges and universities in Maryland, it also clarifies the requirements for considering when they will become eligible for the loan forgiveness program, because the program is available not just to people who work in federal government, but also in state and local government and in the nonprofit sector, because you are considered to be working for the benefit of the public in the services that you provide, whether it's state, local government, or a nonprofit organization. And so you can be eligible to have your debt forgiven as somebody who works in the public service sector and who's chosen to do that with your career, which, we know is a sacrifice, because you can sometimes make more money in the private sector, but people are choosing this path to help people and to serve. And this is an important benefit for you. So, that's what HB 795 does. As I said, it's already been signed into law and will go into effect on July 1st. And we're very, very excited about it. And one of the nice benefits for somebody who is on the Appropriations Committee and deals a lot with our state budget, it doesn't really cost the state government anything, because what we're doing is directing the benefits of a federal program to the folks who live in Maryland and making sure that they take advantage of it. So with that, I will say thank you so much for the opportunity to address you. Thank you again for being part of this webinar. And thanks to all of our activists and advocates who have been supporting financial wellness and financial literacy through this bill and many other bills and programs that we support. And look forward to continuing that work together with you, because there's more to do on financial wellness, and there's more to do on student debt relief and support. And I'm happy to be your partner in that work. Thank you.
Thank you so much, Delegate Spiegel, for your leadership and giving us insight into how Maryland is stepping up to protect and support borrowers. We truly appreciate you. Next, we're excited to hear from Dr. Tisa Canady, an author, advocate, and financial wellness expert who has helped students and families eliminate more than $22 million in federal student loans. She is the founder and executive director of the Maryland Center for Collegiate Financial Wellness. Dr. Tisa is a frequent contributor to local and national media outlets on topics including personal finances and student loan debt. Her insights are currently featured weekly on Financially Speaking, a new podcast on the Women's Empowerment Network of SiriusXM. Dr. Tisa, I'll turn it over to you.
Thank you so much, Tanea, and thank you, Delegate Spiegel, again for your leadership in helping us get HB 795 over the finish line. All right, so this evening I've prepared a student loan update for you all because there's been a lot going on. And before I get into the content, I just want to give you a quick overview of what we're going to cover. First, I want to talk about the student loan experience. There have been many changes in recent years, then focus on what's happening right now and things we can look forward to. Then I want to share with you some tips to be proactive and ready for repayment. And I call these the 4 E's: easing the transition, estimating your payments, evaluating potential benefits, and enrolling in a repayment plan. And to wrap things up, I'll share some resources. So let's go ahead and get into it. All right, so just a quick summary of recent years. In March of 2020, we had a payment pause that was implemented on all federally held student loans. Interest was not accruing either. Then in 2021, we had a broad cancellation proposal from the Biden-Harris administration that could have canceled up to $20,000 per eligible borrower. And in 2022, the Supreme Court struck that plan down, deemed it illegal. At the same time, there were a lot of industry changes going on with student loan servicers, and borrowers were seeing their loans transition from one servicer to another and sometimes to another. Then by 2023, another initiative of the Biden-Harris administration called the Save Repayment Plan was partially implemented, and people saw a lot of relief in the form that their monthly payments went down and interest was not accruing, excess interest was not accruing each month. And then in 2024, the Department of Education completely overhauled the end user servicing experience. So the changes that we've seen in the past 5 years have probably been more than we've seen in the past few decades. It's a lot to keep up with, and I'm also a person who has student loans that I hope to have finally paid off by the end of this year. So let's move on and talk a bit about what's happening in 2025. Thank you, Megan, for the encouragement. I can do it. All right. So in 2025, we are looking at something called the Save Forbearance. I mentioned that the Save Repayment Plan was partially implemented in the summer of 2023. The second part was set to be implemented in July of 2024. However, there was a lawsuit that was successful in landing an injunction against SAVE from being fully implemented. And so this litigation has basically left the validity of SAVE and several other income-driven repayment plans in question. So the government implemented another forbearance for people whose loans are enrolled in SAVE. So right now, payments are not required. Interest is not supposed to be accruing. But the downside of this is that the time spent in the SAVE forbearance does not count as progress toward forgiveness through the income-driven repayment plans. And we just found out not too long ago that the time cannot be earned toward PSLF in real time, but it can be recovered through a process called the PSLF buyback. So once a person has reached that 120 months of qualifying employment, they can go back and apply to buy back the months that were spent in the SAVE forbearance. But right now, the important thing about this litigation is that it's ongoing, and it's not just SAVE that is the subject of the litigation. It's SAVE and several of the income-driven repayment plans, which leads to my next point. Earlier this year, there was limited access to some of the income-driven repayment plans. The online applications were actually removed. So no one could apply for an income-driven repayment plan. No one could apply to consolidate. And the figures that we were seeing on the Department of Education's website through their tool called the Loan Simulator were, let's just call them fluid. So the access to income-driven repayment plans has been sketchy, but the application has been restored. So if you want to apply for an IDR plan, that application is available now at studentaid.gov. All right, let's move on to the next slide. So we also had an announcement that came out in April that the Department of Education would resume collections activity on defaulted student loans. Now, the announcement in April said that that activity would begin on May the 5th, and part of that collections action includes the seizure of federal benefits as well as potentially seizing personal income tax refunds. In June, the Department of Education backtracked just a bit on this and said that they have not pursued seizing any Social Security benefits from borrowers, and they will not pursue seizing them. There is no timeline placed on this announcement, but it is good because people who are receiving Social Security benefits and have student loans that may be in default, for now do not have to worry about their benefits being seized. We also had another federal announcement that came out earlier this year, and that was that the Federal Student Aid Office's loan portfolio of this 1.7, $1.8 trillion worth of loans was going to move to the Small Business Administration. Now, this move has not been confirmed by the Department of Education, and as a student loan borrower, I can confirm to you that no loans have moved to date. And what we have seen, though, are some very active steps to dismantle the Department of Education, and that's where those federal student loans reside right now. So these are just announcements that we've heard. Nothing has moved, so there's nothing actionable for you to do anything about at this time. All right, let's move to the next slide, please. So I just wanted to give you all a snapshot of these four major issues and information and any potential action items that you might want to take. As it relates to the SAVE forbearance, the best place to go is to the source. The Department of Education is your lender as well as your student loan servicer. Now, if your loans are included in the SAVE forbearance, then you can continue to use this forbearance in a number of ways. One is that you can divert what you would have been paying on your student loans to your savings or to other expenses or perhaps investments. You could also take that time to take what you would have paid on the student loans and pay down other debt. You could decide that you just want to be rid of the student loan debt and use this time while the interest is not accruing to take advantage of being able to pay it down faster. You could also decide that you want to get the process rolling and you want to change repayment plans. If you want to do that, that leads me to the next item, which is IDR plans. The income-driven repayment plans allow you to pay based on your income, but the way to get to them is again through studentaid.gov. So if you're interested in changing out of the SAVE plan and into another plan, you want to go to studentaid.gov, log in, you can estimate your payments with the loan simulator, and you can actually complete the application for an IDR plan right there. The next item on the list is collections activity. We've had so many questions from people who are afraid that their wages are going to be garnished or their benefits are going to be seized, and it's because they haven't been making payments. But there are several reasons why you might not have had to make a payment on student loans, and not all of those reasons mean that you're going to be exposed to collections activity. So if you're not sure about the status of your loans, go to studentaid.gov, log in, and you can take a look at each individual loan to make sure that it's in good standing. And if you have a loan that's in default, as soon as you log into studentaid.gov and verify your identity, there will be a red bar at the top of the screen that says you have at least one loan that's in default. And that will let you know that you need to take the steps to bring that loan back into good standing. And if you do have a loan that's in default, that means that you could be exposed to those collections activities. The last item on the list is that loan portfolio movement. Of course, your source is the lender, which is the Department of Education, and your loan servicer. My biggest action item for you here is to avoid clickbait. There are a lot of people who are, kind of putting out content on social media about this, just speculative posts about the move and other things that are happening in the student loan space. And it's easy to, digest that quickly and get very anxious and feel like you have to do something right now. But that move for now has just been talk. There's nothing that you need to do about it. You need to just wait until you hear anything from your lender and your servicer because they will let you know that it's time to take action. All right, let's move on to talk a bit about what's coming next. Another thing that we're getting questions about is what's going to happen, in the 2025 year. The thing about 2025 is it's already set because that was from a previous budget cycle. So we will see new interest rates on federal student loans. Those have been set. They were set by an auction, I believe, last month. But there will be no changes to aid programs. So if your student is in college right now and wondering if they're going to keep their Pell Grant, the Pell Grant program is still here. Any changes that you hear about being talked about in the federal budget cycle and the big beautiful bill, this is about the following budget year. So after June 30th of 2026, that's when we'll see those things go into effect once the federal budget is settled. What we've heard on the radar are more strict eligibility requirements for grants like the Pell Grant program. And we've also seen the idea to impose new limits on federal student loan borrowing for both students and parents. But right now, these are not things that you need to be concerned about for the 2025-2026 year. This is all looking forward, and we also have to wait until that budget is settled to know exactly how it will affect your higher ed experience. All right, let's move on to the next slide and talk a bit about being ready for repayment. So this is where we get into the 4 E's. The first is to ease the transition. Some of you might already be actively in repayment, but for those of you that might be new graduates and are wondering what you should do, you want to make this transition as smooth as possible. The first thing you should know is your servicers. You want to make sure that if you have more than one servicer, they all have up-to-date contact information for you, and you want to take the extra step of making sure that your information within studentaid.gov is up to date, because the government is your lender, your servicer is the party that you will hear from about paying bills. So the table that you see here just lists the remaining federal student loan servicers. This list is a lot shorter than it used to be, but these are the remaining federal student loan servicers and their websites. You'll notice that they've changed. For instance, just a few months ago, I had to go to mohila.com to pay my bill. Now I go to mohila.studentaid.gov. And that's because the Department of Education overhauled this end user experience so that between servicers, the experience looks more consistent for borrowers. So this is a list of servicers, and also that last item there is the default resolution group. So if you have a loan that's in default, you want to make sure that you reach out to them so that you can take the steps to bring that loan back into good standing. All right, let's move on to the next slide. And that's to estimate payments. StudentAid.gov has something called the loan simulator that allows you to see what repayment could look like for you under different repayment plans. Now, when you use the simulator, don't worry if you don't have all the information that they're looking for. Just do the best that you can so that you can find estimates. It's helpful to have your tax filing status, your family size, your salary or adjusted gross income on hand, and any payroll deductions for health insurance premiums, HSA or FSA accounts. I do want to flag for you, though, that the site is going to ask you, what is your primary repayment goal? Is it to pay the loans as quickly as possible, pay the least amount overall? You might not have a strategy. I just want to flag for you that no matter what you click, it's not going to change the output. It's simply going to change the order that the output is displayed in. So if you say, set my own payment, you're not going to be able to say, I want my payment to be $5, and that works. That just lets them know that you're interested in flexibility. So whatever strategy you select will determine the order that the options are displayed in, but it's not going to change the actual options themselves. All right, let's move on to the next slide. And that is I'm sorry. I've got a little bit ahead of myself. So this slide is just to give you all some information about the general differences between paying on a balance-driven plan and an income-driven repayment plan. There are 3 distinguishing factors here. The first one is, what is the payment based on? If you pay under a balance-driven plan, that just means the government's going to look at how much you owe, and they're going to look at the length of the repayment term and how long you want it to be. If you pay on a balance-driven plan, it's going to be similar to paying on something like a car loan, or a mortgage. Whereas on the other hand, if you choose to pay on an income-driven repayment plan, they're going to ask you questions about your household, such as your adjusted gross income, how many people are in your family, and your tax filing status. And they'll use a formula to let you know what they believe you can afford to pay each month. So a balance-driven plan, again, is based on the balance and the length of the repayment term. The income-driven repayment path is based on your household characteristics as well as your balance. Now, in terms of how long you can take to repay loans, on a balance-driven plan, it's usually 10 or 25 years. For some people who have older loans, there's a 30-year option on consolidation loans. With income-driven repayment plans, it should be 20 or 25 years, depending on the plan that you're enrolled in. And the last factor is, how do you qualify? Well, with a balance-driven repayment plan, you don't have to qualify. Anyone can use those because it's not based on your household characteristics. With income-driven repayment, you have to answer those questions. They'll run the formula and they'll let you know which repayment plans you qualify for. All right, let's move to the next slide. And I think this might be the scariest one of the entire presentation. So I just want to preface this by saying, don't try to memorize any of this. This is just the output from the loan simulator. And I share this with you so that you know how wide the range of options will be when you go to the loan simulator to take a look at the balance-driven versus the income-driven repayment plans. So in this example, we have Chris who has $40,000 in student loan debt and a $65,000 salary. The payment options for Chris range from $130 to $459 per month. I apologize for that typo. It says $455. But there's a big difference between $130 and $459 per month. That's why it's so important that you go to the loan simulator, take a look at those options to see if a balance-driven plan is feasible or if an income-driven repayment plan makes more sense. You'll also notice that SAVE is in red here because SAVE is the subject of litigation and no one else can enroll in SAVE right now. But the biggest takeaway from this slide is the range, and you won't know what the range is until you go to the loan simulator, log in, and allow it to work its magic and show you all of these options. All right, let's move on to the next slide. Okay, so next tip I have is for you to evaluate potential benefits. There are some forgiveness and relief programs. The one that Delegate Spiegel talked about is public service loan forgiveness, and it still exists. This is a program that can cancel the remaining balance of your debt after you've made payments for a minimum of 120 months, while at the same time working full-time for a qualifying employer. PSLF is alive and well. We're still getting victory notifications, and each one of those victories is a sweet one. And if you're a public servant, one of those may be in your future as well. There's also forgiveness that's been available through income-driven repayment plans. It takes a lot longer. It's either 20 or 25 years. And right now, because of the litigation, there's really only one income-driven repayment plan that we can say is safe, and that is IBR, which stands for income-based repayment. Also, within the state of Maryland, the Maryland Higher Education Administration, the Maryland Higher Education Commission actually administers a program called the Student Loan Debt Relief Tax Credit, and also some loan assistance repayment programs. These are both programs that can provide you with tangible cash relief. The loan assistance repayment programs are often based on the career that you're working in, and the tax credit has nothing to do with your career, but it's open for residents, and it's a refundable tax credit where you can take that money and use it and put it toward your student loan payments. So definitely go to MHEC for information about Maryland programs and studentaid.gov for information about public service loan forgiveness and income-driven repayment. All right, let's move on to our next slide. About PSLF again, you want to go to studentaid.gov/PSLF. The application is there. You can confirm your employer's eligibility, verify your employment, and review any recommended actions to make sure that you stay on track to benefit from public service loan forgiveness. All right, next slide, please. And this is our final E, and that's to enroll in a repayment plan. I make that the last step because I think that you need to take a look at your options first, evaluate the benefits, and then make a decision about which plan to enroll in. If it's the balance-driven plan, you've got the standard plan as an option. You've got the graduated plan as an option. The standard plan is a fixed payment all throughout. The graduated plan is a plan that starts you low and ends you high. Every 2 years, the payment increases, kind of like stair-step intervals. And the idea is that as you get further into your career, you'll make more money and you'll be able to make higher student loan payments. On the income-driven repayment side, as I mentioned before, IBR is the only income-driven repayment plan that we can truly say is safe right now. The others, some of you may be enrolled in SAVE. The others that are available are income contingent repayment and pay as you earn. This may change once the litigation is settled, but for right now, these are the options. For new grads, I just want to flag this for you. This is so important. You need to make the decision to choose a repayment plan for yourself, because if you don't, you will be automatically routed into the 10-year standard plan. And that is the plan that is most often the most expensive plan. And you don't want to start yourself off with a payment that you can't sustain and open the door for things like delinquency and default. So please make sure that you pay attention to the correspondence from your servicer. Be proactive, select your own repayment plan so that you're starting off in a manageable space. And then last slide, I believe, or next to last slide. Just a quick note about default. Your servicer is your first point of contact for repayment questions and if you're experiencing difficulty with repayment. You want to avoid going into default, which is at least 270 days of non-payment. If you do go into default, your entire balance can become due immediately. You'll expose yourself to those collections activities like wage garnishment or potentially the seizure of your federal benefits or tax refund. You'd also lose eligibility for federal financial aid if you wanted to go back to school. And in some cases, you may have your official academic transcript withheld. So we want to stay out of default. If you're experiencing any difficulty with repayment, contact your servicer immediately and ask them about the options for relief. All right, now we can go to the next slide. And that is just to wrap things up. Please mind your sources when it comes to information about student loans. You want to rely on your lender, your servicer, and I hope that you'll count the Maryland Center for Collegiate Financial Wellness among those reliable sources. We are on social media at the MCCFW. And to get repayment ready on federal student loans, please make sure you've updated your contact information with the federal government via studentaid.gov and your servicers through their online portals. You want an easy transition. It starts with estimating those payments, enrolling in a repayment plan after you've evaluated the potential benefits, but I have some links to share. For the federal government, again, it's studentaid.gov, and for Marylanders, it's mhec.maryland.gov. Now, my very last slide just has a few QR codes. The first one is if you'd like to visit our YouTube library, because I take questions from student loan borrowers twice a month and tons of questions out there. Your answer might already be there, but you can go to YouTube and find the library for that. The second is Financially Speaking, which is the new podcast that I'm a part of on Sirius XM, and I talk a lot about student loans. And the last thing is if you'd like to keep in touch with the Maryland Center for Collegiate Financial Wellness, including getting information about student loans and higher ed in general, that last code will take you to our mailing list. So thank you all so much for bearing with me. I know that was a lot of information in a relatively short amount of time, but I hope that it's helped bring you some clarity.
Thank you so much, Dr. Tisa, for breaking down those federal changes and giving us such helpful information. Now we're going to shift gears a bit and talk about how student loans can impact something many people don't expect, which is your taxes. I'd like to introduce Kyrah Mair. Kyrah is the Senior Program Associate for Tax Operations at the Cash Campaign of Maryland. For the last 4 years, Kyrah has assisted hundreds of individuals and families with assessing free tax preparation and asset building services. Kyrah manages a VITA tax site at the Enoch Pratt Library, and she also manages the Cash Campaign's Back Tax program. She will walk us through how student loan repayment, forgiveness, and interest can affect your tax return and what to keep in mind during tax season. Kyrah, take it away.
Thank you, Tanea, for that wonderful introduction, and thank you, Delegate Spiegel and Dr. Tisa, for your presentations. And thank you to everyone in attendance. Taxes gets me up every single morning, so I'm very excited to be going over the tax implications that student loans can have for you. Next slide, please. All right, so first off, we're going to start with some frequently asked questions. And the first one I have here is, do students have to file taxes? The answer to that is, next slide, please. It depends. So on the screen, I have a chart for tax year 2024, the different filing requirements, and that is based off your filing status, your age, and your gross income. So you'll notice that on this chart, there is no mention of your status as a student. That does not exempt you from paying taxes. So it's important to know when you do need to file taxes. If you are working as a student, which I know many students do, because it's hard out here, you have to. You might need to file a tax return, so it's important to know when to do so. So typically most students are going to be single filers and under age 65. So in the case for tax year 2024, that income threshold was $14,600. So if your gross income exceeded that amount, and this is not including tax-free or tax-exempt income, which we'll talk a little bit more about that later, then you likely had a filing requirement. Some of us are being claimed by our parents. If that is the case, you could still have to file a tax return. It's all dependent upon your particular situation in a given tax year. Next slide, please. There are times when you're not required to file, but you still should file a tax return. For people who might want to do that, that would be students who might be eligible for refundable tax credits. If you had taxes withheld for your income, so let's say your gross income was less than that $14,600 threshold, but you had taxes withheld, you'd be entitled to get those taxes back. And then another reason would be if you need to have a tax return on record. So I know when you apply for FAFSA, you often have to import your tax information. So that could be one reason. Other reasons would be certain financial goals, like if you want to buy a house, they may require to see a certain amount of years of tax returns on file. So it's always important to file, to consider whether or not it's good for you to file, whether you have to or not. Next slide, please. So my next question is, are student loans taxable? And if we go to the next slide, we'll see that generally, and as a tax person, you have to often start with generally because there are always different exceptions to the rule. But generally, taking out a student loan is not a taxable event. Student loans are not considered taxable income since it's borrowed money and you're obligated to repay it. So the act of taking out a student loan does not require that you file a tax return. Next slide, please. What if your student loans are forgiven? So if your student loans are forgiven, next slide, please. That's considered discharge debt. So cancellation of debt, discharge debt, forgiven debt, that's all the same, just different ways to say the same thing. So any discharge debt, including student loan debt, may be considered taxable income. So that is important to remember. And I know having your debt canceled can be a huge relief. And then come time to file your taxes and you find out, oh my gosh, that $20,000 debt that I had that got canceled, I'm having to pay taxes on it. Canceled debt can be taxable. Fortunately, the Biden administration's response to COVID, so the American Rescue Plan Act of 2021, exempted student loan debt from being taxable if forgiven between the years 2021 and 2025. Newsflash, it is 2025. That provision is set to expire. And there's not a lot of hope that it will be extended. So just be aware that if you do have student loan debt canceled, moving forward, that may be considered taxable. Next slide, please. All right, so what tax benefits exist for students? So I'm going to talk about some tax benefits that exist for students who are currently in school, and then we'll transition into some benefits that exist for people who are in repayment, like myself. And first up, we have some tax credits. So the American Opportunity Credit, there are two main tax credits on your federal return that you can claim. This is the better of the two. So the American Opportunity Credit is a partially refundable tax credit for eligible taxpayers in their first 4 years of post-secondary education. And that is the key. You have to be within your first 4 years of school. If you're in your 5th or 6th year, you're generally going to be disqualified from claiming this credit. The credit is worth up to $2,500 per eligible student. So, let's say that you have multiple dependents on your return and they're both in school, you can claim this credit for both students. And up to $1,000 per eligible student is refundable. Refundable means that even if your tax bill is zero, this money can go back into your pocket, so it can increase your refund. Next slide, please. The Lifetime Learning Credit is the alternative tax credit. It's a non-refundable tax credit. So again, I mentioned refundable means more money in your pocket. Non-refundable, if your tax bill is zero, there is no additional benefit for you. So that money will not, any money left over from the credit after it reduces your tax bill to zero will not go back into your pocket. That's one of the things that makes the American Opportunity Credit a more favorable credit. But the Lifetime Learning Credit, hence its name, can be claimed indefinitely. There is no time limit. You can be in your first year of school, although of course we would recommend the American Opportunity Credit in that case, or you could be in your 10th year of school. The credit is worth up to $2,000 per tax return. So on the previous slide, we mentioned per eligible student, but this particular tax credit is per tax return. So that's something else important to note. Next slide, please. This credit is for a very specific group of taxpayers, and in the state of Maryland specifically. So for Maryland taxpayers who are qualified teachers, you can claim up to $1,000 for tuition paid for graduate level courses that are required to maintain your certification. So it's just one of the ways that Maryland supports its teachers. So shout out to any teachers on the call. Next slide, please. All right, so these are some other benefits. I summarized it here on this chart. There's different income that students might have, such as scholarships and grants, or distributions from 529 plans if they were a beneficiary of such a plan. And I just wanted to highlight these different sources of income. I mentioned earlier that there is some income that is tax exempt. If you receive scholarships or grants, as long as that's being used towards your qualified education expenses, it's not going to be taxable. If you receive scholarships and grants and it exceeds the amount of tuition and fees that you had to pay to your school, then that income may be considered taxable income. So that's always important to keep in mind. We also have qualified tuition program, also known as a 529 plan. The earnings on that are not taxed. And then distributions that you take out from a 529 plan, again, as long as it's used on qualified education expenses, are not going to be taxable. Same thing for the Coverdell Education Savings Account. It's similar to a 529 plan, but it definitely has its differences. One of the key differences is that you can use it on K through 12 education, but that as well, as long as it's being used on qualified education expenses, it's not going to be taxable. And then you have employer-provided education assistance. There is a limit on how much you can receive before that becomes taxable. And there is a caveat, which I didn't include in here. I didn't want to get too granular. But if it's a work fringe benefit, then, it's treated a bit differently. But that's also just important to note. And then you have higher education exemption to early IRA distributions. Now, I put that in here, but this is not an endorsement. I don't recommend taking funds out of your IRA to pay for school. But just be aware that if you are to do that, the 10% additional tax on the early distribution would be waived if you qualify for that exemption. So that's another benefit that, being in school and different income for school can have on your tax returns. Next slide, please. We have a few more benefits to go over. So these I'm shifting now into benefits that are for people in repayment. So the student loan interest deduction, taxpayers can deduct up to $2,500 of interest paid on your student loans. This can reduce your taxable income, which can ultimately reduce your tax bill. It's important to note that your filing status does matter when it comes to claiming this deduction. If you are married filing separate, you are unfortunately ineligible to claim this deduction. So the government does incentivize marriage in a way, especially when it comes to taxes. So it's just important to be aware of that in this case. Next slide, please. All right, Dr. Tisa highlighted this earlier. I love this credit. It's just an amazing thing about being in Maryland. The Maryland Student Loan Debt Relief Tax Credit. Maryland taxpayers who have incurred at least $20,000 in student loan debt and have a remaining balance of at least $5,000 to repay are eligible for this credit. You must use the credit received towards student loan payments, and you do have to submit proof of these payments to the Maryland Higher Education Commission within 2 years of claiming the credit, or else you risk the credit being recaptured. Next slide, please. This credit is not something that you want to wait until you file your taxes to claim. It is a separate application that you must apply for annually using Maryland One Stop. And applications open from July 1st to September 15th. So, it's not July 1st yet, so you haven't missed anything. So please take advantage of this if you are in repayment. Go to Maryland One Stop. It's very easy, very user-friendly. Create an account and apply for this as soon as possible. Don't wait until the September 15th deadline. And it's important to know the credit is worth up to $5,000 I personally was a recipient of this a couple years ago, and I got $1,500. So it is a very meaningful and impactful credit, and I do recommend applying for it. All right, so what if you miss required student loan payments? Dr. Tisa touched on this earlier. There is something called the Treasury Offset Program, which is run through the Department of U.S. Treasury and ran by the Bureau of Fiscal Service within that department. If you've defaulted on a federal student loan or other federal or state debt, such as child support or past due taxes, some or all of your tax refund may be withheld to satisfy the debt. The IRS will not hesitate to take your refund and apply it to these debts. So as Dr. Tisa mentioned earlier, being in default is defined as missing a payment for 270 days or more. For different types of loans, this could be defined differently, but that is the general definition of being in default. And there are many other risks, but in terms of your taxes, you risk your tax refund being captured. Next slide, please. So, are there any free resources to help with your taxes? And the answer is a resounding yes. For starters, you got to do a VITA plug. The Cash Campaign runs the VITA program throughout the state of Maryland. We have a coalition of partners in the city of Baltimore and throughout the entire state that provide this service for free. So that is no cost to you. As long as your income was $67,000 or lower, that income threshold is adjusted each year for inflation. So this current income limit is for the current tax year, so 2024, and that will likely be adjusted just a little bit for next year. But the tax prep is completely free. If you qualify, we want to see you at our sites. And on the next slide, you'll see how you can find the site nearest you. You can use the VITA TCE locator tool on the IRS website, or you can visit our website, bemorefreetaxes.org, if you are in the state of Maryland, and you can find the tax site closest to you. All right, Tanea mentioned earlier in my bio that I work with the back tax program. So if you missed the tax filing deadline, we're more than happy to help you at our back tax program. We're based in downtown Baltimore. We're open from May through September 2025, but we do have a virtual component. So if you go to our website, bemorefreetaxes.org, there's that virtual component through Get Your Refund. We can help with tax years from 2019 through 2024, and we can also help with amendments. If you realize after listening to this call, I forgot to claim a certain education credit, please come in and get the amendment. Nothing pains me more than seeing people leave money on the table. So I mean it when we say we want to see you at our sites. The QR code is will direct you to our interest form, or you can just go to the website listed below. All right, there's some other free resources. So IRS Direct Files listed at the top, and there is an asterisk there because unfortunately, the current administration does not plan to move forward with IRS Direct File, but it is still available through October 15th of this year. And the income limit, as you can see, is much higher than our income limit with VITA. And the income limit changes depending on your situation, but for the most part, it's $200,000 or $168,600 if you have more than one employer. There's also IRS Free File. The income limit there is $84,000. My Free Taxes, similar income limit there. Then there's Get Your Refund, which I mentioned earlier, which is the virtual component of our VITA program, or you can file on your own if your income's under $84,000. And then there's Cash App Taxes, which has no income limit. All right, with that, I conclude my portion of the presentations. My light just went out, so it's perfect timing. But I'll turn it back over to Tanea. Thank you all.
Thank you so much, Kyrah, for those helpful insights on how student loans can affect your taxes. It's definitely something more borrowers should be aware of. At this time, we'll like to open the floor for questions. If you have not already done so, please drop your questions in the chat, or you can raise your hand and we'll call on you to unmute. We will do our best to get through as many questions as possible. The first question I have is for Tisa. Tisa, how do people know if their loans are in default?
Great. That's a great question. Go to studentaid.gov. You will have to log in. So that means you need your FSA ID and a password. And once you get past all the two-step verification semantics, you will come to a screen that's called your dashboard. If you have at least one loan that's in default, there will be a red bar across the top of the screen that says you have at least one student loan that's in default. And here's the recommended action, and it's to reach out to the default resolution group within the Department of Education. So studentaid.gov is the best place to go to confirm a loan standing and whether a loan is in default.
All right, thank you. Another question for you. There's been a lot of buzz on social media lately about Elon Musk and whether people should dispute their student loans because of his actions. What is your perspective on that? And I know this is a question I personally had for you a few weeks ago.
My personal perspective is that I don't see it as a viable path for cancellation. What the larger theme here is a violation of privacy as a means to have debt canceled. And privacy violations, I have not yet seen a privacy violation that has resulted in any debt being forgiven. Whenever there's a breach or something like that, sometimes we might see a class action lawsuit and people can apply and have their piece of the pie that may be $10 or $20, if it progresses to that level. But I have never seen anyone have a debt forgiven because of a privacy violation, and I don't expect that to change. So I do encourage people to advocate for yourself. If you don't agree with, what the government is doing, you can file a complaint. You can definitely use your voice to share your disagreement. However, you should not expect to have your debt canceled because something may have happened that you do not agree with.
Thank you, Tisa.
Yeah.
Question for Kyrah. If I'm at risk of having my tax refund taken by the IRS, are there any steps I can take to prevent that from happening?
Yes, there are actually. So in particular for married filers, if you are wanting to file a joint return, or let's say you're afraid to file a joint return, because your spouse has a debt, there is a form called the injured spouse form. So you can still receive the benefits of completing a married filing joint return, but then add that injured spouse form, and that can protect your portion of the refund from being captured. There is also a program through the Treasury, I believe, where you can, if you have extreme economic hardship, um, intervene before the Treasury offset program comes into play. You do have to inquire about that, though, before you actually file your tax return. So if you're waiting to inquire about that after you filed, it's unfortunately too late.
Okay. Thank you. Next question I see, is there a benefit to applying for IBR if you're currently in forbearance under the SAVE plan?
So it depends on what's your strategy. Right now, the save forbearance means that you don't have to make any payments. And for some people, that is a welcomed relief. But if you're a person that, let's say you're actively pursuing PSLF and you don't necessarily believe that the buyback is going to be a viable option, you may want to apply for IBR so that you can begin to start earning those months toward public service loan forgiveness as you work them, instead of waiting for the buyback to try to recapture them. So for the people who are comfortable now not making payments and not making that progress toward forgiveness, then I would say there's no incentive to move things. But for those who really want to kind of get things going again, you may want to apply for IBR just to get the progress rolling. I will say though that we don't know how long it's going to take the servicers in the Department of Education to process applications for income-driven repayment plans. So you could go out and complete the application today, and we can't give you any estimate as for how long it will take for that application to be processed. So even if you put it in, it doesn't mean that your progress is going to resume anytime soon. But I totally understand the discomfort with being stuck in limbo. Hopefully, we'll see a resolution to that lawsuit. I think the forbearance date has been pushed out to October of this year for some people, but hopefully we will see a resolution soon.
Thank you.
You're welcome.
Another question, are there any forgiveness options for Parent Plus loans?
Okay. So Parent Plus loans can be forgiven by way of public service loan forgiveness. Unfortunately, it's gotten a little bit harder because under the Biden administration, we were dealing with a temporary relaxation of rules that allowed more people to get forgiveness because of some of the programmatic failures basically prior to 2021. So Parent Plus loans can be forgiven by way of public service loan forgiveness. They can be forgiven by way of income-driven repayment forgiveness on paper. With Parent Plus loan borrowers, though, I would encourage you to go to studentaid.gov, see if you have a payment count that's there so you'll know how much progress you've made toward forgiveness by way of public service loan forgiveness. You may not be able to see one for income-driven repayment, but just get an idea of how long you've been in repayment, how much credit you might have already. And then I would say reach out because for Parent Plus loan borrowers, it's very tricky right now. Again, under the Biden administration, there were relaxed rules that allowed parents to get the same benefits that students received. But once those benefits cut off, it made it an even more difficult situation for Parent Plus loan borrowers because they may have to consolidate to get on an income-driven repayment plan to continue earning credit toward those forgiveness milestones.
Okay, thank you.
Well,
Kyrah, the next question is for you. As a married filer, is there any additional information that could help or hurt me on my taxes?
So I mentioned this earlier about the injured spouse form. So really there's also, I just want to mention some people choose to file married filing separate, so that their income is not, the joint income of the household is not considered when you are entering into those repayment options, those income-driven repayment plans. So some people, decide to do married filing separate for that reason. But you can still file married filing joint, and the way that that works with the income-driven repayment plans is typically they will consider the total income, but also the total debt, so that income to debt ratio. So I do really advise 9 times out of 10, it's going to be better to file married filing joint. And, again, I just want to highlight that injured spouse form. I even had clients today who came in and they're just so afraid to file a joint return when the spouse has some federal debt. But there are protections, and most notably that injured spouse form. So there are protections for married filers, even if somebody has defaulted on a student loan.
Great, thank you. Carla, are you able to come off mute? You put something in the chat. Can you add some color to the benefits? Just want to give you an opportunity to ask your question.
Thank you for asking. Am I on mute still? Or can you hear me?
No, we can hear you.
Okay. Hi, Kyrah. I was just that was in response to someone mentioning, or the delegate mentioning, that yes, there is a benefit for coming off of the SAVE plan, but I think we got that answer, so I really appreciate it.
All righty, no problem.
Thank
Anyone
you.
else feel free? No problem. Feel free to come off mute if you have any questions. I tried to read all the questions that's in the chat, but feel free to ask any question or whatever your comment may be. Now is your time. All right, seeing none.
I can.
Thank you all. Oh, go ahead.
Sorry, do we still have a minute? I can't see the time on my phone.
Yeah.
Okay, I can ask a question that might not be able to be answered, but I know there's some talk of removing forgiveness options, and is that still a possibility given the income-based repayment structure that a lot of people like myself have been under for 12 some odd years?
So the removal of forgiveness is definitely on the radar. Pardon me, I'm sorry, my child.
Sorry, am I still on mute?
No. Yeah.
That was
Dr.
funny.
Tisa, be back.
I'm sorry, right at
The
7:30, they
balance,
know.
right?
But so there is talk of narrowing forgiveness, especially, well, narrowing public service loan forgiveness to exclude some populations. And then for income-driven repayment, there are some people that want to do away with that altogether. The talk has been that anything that has been on the books in the past would not be repealed. But
Okay.
going forward, after this budget is set, going forward, things would change and forgiveness would still be there, but it would just be, it would be a totally, there would be a totally different look to it. It would take
So
long.
for
It wouldn't be something that happens a little bit over a time instead of just one big, huge amount of forgiveness in the end. But again, that's just speculative. That's about what we've seen in the proposed budget. And until we see the actual budget that gets passed, we don't know what forgiveness is going to look like. But with PSLF, I'm hopeful that it will not be touched too much and that it will remain intact.
but for the income-driven repayment plans, there will be some element of grandfathering of existing borrowers.
Yes, that's what we're
Okay.
seeing. But for new borrowers,
Okay.
income-driven repayment forgiveness would look very different.
Thank you.
You're welcome.
Thank you, Carla, for your question. Any other questions? All right. Well, thank you all again for joining us tonight. We hope that you found this information helpful and that you're walking away with a better understanding of your student loan options and rights. A huge thank you again to our speakers, Delegate Spiegel, Dr. Tisa Silver Canady, and Kyrah Mair for joining us and sharing their time, expertise, and insight. If you'd like to stay connected with the Cash Campaign of Maryland or learn more about our work, please visit our website, www.cashmd.org. And finally, if you found tonight valuable, please feel free to share this information with your networks. The more people who are informed, the stronger we all are. Thanks again. Have a great evening and take care.